This is a video regards crude oil market and presented by Group 24. Introduction. Crude oil is a type of petroleum originates from hydrocarbon and organic materials like animals and plants. All firms belong to oligopoly market due to there are only a few firms and many buyers exist in this industry. OPEC, which is the cartel between 14 crude oil producing countries, is the main supplier of crude oil in worldwide. Fluctuation of crude oil prices due to several changes in demand and supply. In 1999 to 2012, crude oil prices began to rise as people need crude oil for their vehicles. Innovation of technology which found new renewable resources had led to the falling in demand of crude oil in 2014.
Factor affecting demand. Innovation that bring more substitutes. The renewable energy source has become the substitute for crude oil like nuclear power, solar energy, and wind power. When there are more alternative energy sources, it will shift the demand curve to left. According to the illustration, using the renewable energy causes the decreasing in quantity demanded of crude oil and lead to fall the price. Secondly, the income elasticity of demand for crude oil is between 0 and 1. So, it's classified as necessity goods and we cannot live without it. Hence, when the income increases, it will shift the demand curve to right, causing the quantity demand and price of crude oil increase. The other reason will change the demand of crude oil is the taste and preference of user. China will start to use the renewable source to improve their economy like hybrid car, solar energy, and metro. So, those countries will change their preference and taste from crude oil to renewable energy, will shift the demand curve to left, causing the price and quantity demanded of crude oil decrease. Next, the size of the market will also change the demand of crude oil. The crude oil is the basic energy source from transportation, industry, and machinery. The developing country like Malaysia needs the crude oil to maintain their economy because it is cheaper than the clear power. Hence, when the size of market increase, it will shift the demand curve to right, the quantity demanded and price of crude oil will increase.
Expectation of future price. If the consumer expect that the price of crude oil will increase in future, they will purchase now. The quantity demand of crude oil increase and the demand curve will shift to the right. The price will boost at the end. In opposite, the consumer will reduce their quantity demand now when the expected future price of crude oil is decreasing. Demand curve will shift to the left and the current price will fall at the end. Exchange rate. In case of appreciation, such as US dollar strengthen in value, increasing of crude oil price can be cancelled out by a more valuable form of money. Finally, the price of crude oil will increase.
Factors affecting supply. Cost of production. Oil companies are associated with exploration, development, and production of new oil reserves, in which accumulates expenses that will affect financial costs of the oil producers. Production cost varies from each country. The world oil prices will fall lower to balance the government expenditure. Oil-producing countries will suffer from price decrease if the market price falls below break-even price. In the graph, production costs will increase, profitability will decrease, thus the supply of oil will decrease. Technology flaking. With the emergence of technology, hydraulic flaking and horizontal drilling protects the environment and boosts efficiency in the crude oil production. Through flaking, productivity are increased from 102,000 barrels a day in 2000 to 4.3 million barrels a day in 2015. As technology becomes more advanced, the productivity of crude oil companies improves, thus the supply of oil increase.
Crude oil discovery. According to this table, global conventional discovery of crude oil has fallen significantly since 2014 due to the budget of exploration of company. There should be a shortage in because the quantity supply might decrease. Supply curve will shift to the left and lead to the rising of price. Non-conventional inventory. As an example, the price of crude oil will increase when the IEA of United States increase its strategic reserve. This is because a part of unconventional inventory will move into the conventional inventory. certain degree of shortage will appear in the trade market due to the reduction of non-conventional inventory. This will stimulate the rising in crude oil price at the end. Disaster on oil-producing country. Hurricane Katrina causes crude oil price rise to $3 a barrel in 2005. This is because 90% of the United States oil's production has been affected by Katrina. Thus, the crude oil price will rise due to the decreasing of quantity supply.
Welfare implication. Higher and lower price will have an effect regards global welfare. As crude oil is the complement goods of vertical, a lower crude oil price results people are using their own propulsion tools rather than using public transportation. The exhaust gases will result the air pollution problem. The noise pollution and the tide raising may result by traffic jam. The occurrence of road accident will be rise too. The household income will be influenced also when the price of crude oil rises, as the consumer have to pay more to purchase crude oil. The low income of a household will decrease the saving of consumer and result the decreasing in the investment. Hence, the economic growth will show down at the end.
Conclusion. Public solutions should be imposed to overcome the tragedy of common resource. Due to global climate issue, the government can introduce a new form of policy which sets a carbon tax that requires producers to pay for how much they pollute. The car-sharing plan should be carried out to restrain over-demand of people when the price of crude oil is lower. Government intervention can potentially correct inefficiency and raise economic well-being, where it relates to economy and the global welfare. That's all from Group 24. Thank you.